Greetings, Dr. Jeffrey Scott, and this is my Market MRI Pro update for December 10th, 2025. What a day for the bulls. I'm so glad that my timing model has kept me in the market because it's days like today that really impact one's portfolio performance. Now, of course, it could have gone the other way too, and we'll have to see what happens on Thursday. Did Powell just slay the Grinch? Does this mean Santa's coming early? Typically, it doesn't start for another week or so, or 10 days. But boy, was it a bullish response. Kind of not too hot and not too cold, kind of a Goldilocks moment. And are there new highs ahead? Again, my name's Jeffrey Scott. I am the Market MRI Pro at gmail.com. My Google group is called Top Down Trader, and my website, marketmripro.com. This is for educational purposes only. Anything I recommend should be taken in the spirit of education, not investment advice. The intent of the video is to demonstrate the tools of top-down analysis, how I apply them. Trading involves risk. You are solely responsible for any investment decisions you make. I may own or intend to buy or sell any stock mentioned in this report. Trading stocks and options should be considered risky. You should always consult with your financial advisor before making trades. And I have tools for multiple platforms, but I am independent. My Google group is called Top Down Trader. You just go to Google Groups, sign into Google Groups, go to all groups, find Top Down Trader, let us know how you want to be contacted. Why? Because it's free. From time to time, I'll give you discounts. You'll get education that I don't offer to everybody else. And it's where I support the folks that have my tools or are interested in how I trade. Our leaders index from the June meeting just refuses to break. Now, I was a little surprised today. It was only up 0.5%. And I wondered why. And then it's probably because we had some big losers. Bloom Energy was down 7.5%. Credo was down over 7%. But it was a strong session for the markets and for the leaders index. Why was it such a big day? Well, we had the FOMC interest rate decision. As I listened to the commentary and read the statement, it almost feels like they're thinking about quantitative easing with buying notes. It'll be interesting to see where that falls. But I think they did the right thing. There's so much data out there. You have to say we're data dependent and we want to see the data. And they feel that 3% is kind of neutral. Well, gold sure liked it. We'll see if the markets continue to like it. We'll get some jobless claims on December 6th. If there's much more or much less jobless claims than expected, that might be bothersome for the market because part of why they made their comments the way they did was because they thought the jobs were weakening. And then perhaps the biggest opportunity to trip the market will come on Friday. Now, I don't believe either of those were voted against the cut. But what I've seen over the years is if we misinterpret what Powell meant and the response was too bullish, then just maybe the next set of Fed speakers will try and talk us out of that bullish mode. Hope not, but I've seen it happen before. My guess is we go higher into year end. After hours today, the big earnings, Oracle did not repeat what they did last earnings with a major move. We're actually down 11%. OXM, Oxford Manufacturing, is down 21%. Adobe slightly elevated at up 0.5%, and Coca-Cola is flat on a new CEO announcement. It's always true what I put in the lower right-hand corner. It's a judgment call to hold stocks over its earnings dates. It's bad judgment to not know when your stock's earnings date is scheduled. So, Saturday, December 13th, 11 a.m. Eastern Standard Time, I will be doing an MRI training session. I will look at the trading app. I'll probably look at wealth charts, the Metastock add-on, and the TradeStation tool, and talk about the differences between them, the strengths and the weaknesses, and how I use them to do my nightly review. I'm all about workflow and making your life easier. I'll go over some of the signals I use as well. I will look at the market and we'll spend the last section working up an options trade. And you'll see how I like to look at options as a alternative to stock and how I try and design a relatively low-cost trade with high upside and well-defined, not necessarily little downside. But what I like about options is I can define the downside. And then we'll have Q&A. Look for the link below, or if you're a top-down member, it's in the email that you got tonight announcing that the video is up. And again, if you have any questions about anything I do, my platform, anything, feel free to email me at marketmripro@gmail.com. And if you have any issue with the product itself, at least the Market MRI Pro app, coding at marketmripro.com, and please join my Google group. And hopefully we'll see you in Florida in the late third, early fourth quarter for the live session that I'll be doing in 26, and maybe we'll see you in June in Orange County. All right, here is the heads-up display that I like to watch during the day, and what we could see is that first four of the market ETFs, and they all finished in the upper part of the range. A little bit of a sell-off, it's a bad word. A little bit of an easing into the end of the day. Probably some profit taking. It's never wrong to trim as the markets go higher. We can see the Russell led higher at 1.36, and they might be the biggest beneficiary, the small caps, of the rate cuts. The diamonds were up 1%, Spider 0.66, and the Qs, at least the 100s, were only up 0.41. The dollar dropped 0.53%. Bitcoin relatively flat, and over the last 5 days it's down 0.5%, so relatively flat. And the VIX dropped 3.91% at the bottom of the day. From a breadth perspective, look at the massive increase in the 52-week new highs at 136 and 152 on the NASDAQ, and the new highs minus new lows have gone to triple digits. Much better look. You want to see what breadth is? Look at this, 83% of the S&P 1500 were up, 60% of the NASDAQ, and 72% of the NYSE. So clearly the NASDAQ was the laggard, and it still did pretty darn good with decent breadth. You could see most of the sectors were up, most of the industry groups were up today as well. In the S&P 500, the materials led up 1.96, industrials up 1.83, 1.47 on discretionary, 1.45 on healthcare. The only thing negative was utilities, and that's certainly not a surprise. They're sort of a risk on play, a risk off play when there's more risk out there. And, the defensive staples, real estate, utilities led to the downside. Interestingly, technology was only up 0.48, and I guess that goes with the Q. NVIDIA was down. Lots of banter about DeepSeek and were they secretly using NVIDIA chips. If we look at one-day change, construction led, of course, short rates go down, builders go up. But boy, they started off the week with bad earnings. Solar, copper miners, infrastructure, gold, silver, lithium, retailer, Internet of Things, semiconductors, the growth story that we like so much. What didn't do well? Not a whole lot. I mean, cannabis, who cares? MLPs, which are dividend plays, uranium, data centers, and video games. And nothing was down more, nothing else was down of all my different themes. Sad day in the Scott household. I'm an ardent Michigan fan, and our coach made a mistake, and our coach is out. So I'll make the Buckeyes really happy. My phone's lighting up. That's what the beeps are. All right, so strong day. Let's take a look. We know the timing model is going to be bullish, and it is. Look at this move daily. If there was a little flag there, are we breaking out of a flag on these? Maybe. Bullish. How can you be bearish here? Let's look at right here. We are in the neighborhood of an all-time closing high on the spiders. The all-time high, I don't think we hit today. If you look at the Qs, another bullish candle, not, nowhere close to the all-time, well, it's close, 1% away from the all-time high. The Russell, new closing high and new all-time high. Wow. Wow. And then look at the diamonds, just off all-time highs here and all-time closing highs. Really, really bullish day in the market. Weeklies, you know what they're going to look like. They're going to look great. Not a whole lot to say. Hold on one second. I got to respond. Let's continue. The monthlies we don't need to look at. If we look at the U.S. index ETFs, look at the bullish days here. We already talked about 0.66 on the spider. Again, just off of all-time highs and in the neighborhood of all-time closing highs. Let's just again look at that. I think we're at all-time closing highs. If not, we're within $1. Now, we're projected to have a little bit of seasonal weakness, both from a 5 and a 10-year period of time. And that gets us to the 18th of December, and that's when the Christmas rally starts. So it'll be interesting to see. Starts the 20th, I believe, if we just go on higher here after that statement. Again, we have jobless claims on Thursday. We've got other Fed heads to talk us down on Friday. I'm not going to go into deep on the Qs. We already talked about it. Strong day on the Qs, the diamonds, the Russell setting all-time highs. VIX was down significantly, down 6.85%. And the U.S. dollar dropped below the 50 and down 0.53. Tough, 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 tough. Tough day on the dollar, but good for my stocks. Commodities. You know what likes rate cuts? Especially when there's probably still some underlying inflation? Gold. Gold has broken out. Boom. So whether you're buying GLD, GDX, leveraged, or some miners, probably wouldn't be a bad time to have some of those. Silver, which is at an all-time high, got even higher today. So silver was up 1.63, while gold was up 0.43. Oil bounced off the lower trend line, and we'll see if it can take out this area of resistance. Natural gas maybe is done falling. The one sand in the ointment, so to speak, is the 10-year was up a bit. Let's see what it was up 0.14%, and the 30-year was up 0.15%. None of those are in a bad place or the end is not near, but those are perhaps a warning sign that maybe not all is wonderful for stocks coming up. If these things break higher with the Fed cutting, it suggests to me that the smart money, the bonds, are not happy because they see the inflation. That might be okay for gold, but it won't be helpful on others. All right, let's look at the buckets briefing. As I look at the buckets, I'm looking to see if we're starting to build up above. We're starting to get bullish here, but only 7% are above on the Bollinger Bands on the NYSE, 9% on the NASDAQ, 8% on the S&P 1500, and 11 on the Russell. So, hey, we've had a long run. We're at near all-time highs. We're not overbought. Market breadth. Look at this, all-time highs on the NYSE, both all-time highs, all-time closing highs. Does this mean we've broken out of a potential megaphone pattern? Wow, all I can say is what a great day for the NYSE. We'll see. And then if we look at the NASDAQ, you could see a nice positive day on the NASDAQ as well. Now, one thing I always like to know is how is volume on such a strong day? And I don't think we can tell yet because I know my volume bars will update. Well, we were up 11% from normal volume on the NYSE, excuse me, on the NASDAQ, and up 22% from normal volume on the NYSE. That, folks, is meaningful. extremely meaningful. We look at stocks above the various moving averages are increasing in both. So let's just look back and see, are we at all-time highs there? No, we're not there. We're not over here. So that's not a signal yet of overbought. We look at new high, new lows are positive, and look at the last number of days. Sort of crept up on me. Lots of new highs versus new lows. The AD lines are positive, and the up-down volume is also positive. No new signals on the bottom. I'm bullish here. Boy, let's look at the other market breadth thing that I worry about, which is the 13-week new high, new low. Even after a very big day in the markets on Wednesday, 0.74, 0.83, 0.89 on the Russell, and 0.73. None of these fall in the uh-oh category. So I'm going to put this all together and say we can run higher unless there's something bad news-wise, the jobless claims or those Feds speakers shoot down our thoughts on what's happening here. I don't believe Powell intends for this market to go on a big 20% run here, and I can't imagine they won't be some talking back, but I don't have any short-term or long-term overboughts that say we need to pull back here. And those that follow me know that I pay a lot of attention to my market breadth tools for looking for that. Ratio charts, most of the things were up today. I think our utilities has a problem. Praveen's checking on it, but short term, you can see they're pulling back. Staples were weak. They're defensive, as was real estate. But look at technology, bavoom. Look at industrials. Look at materials turning up, communications. Gotta love a broad-based rally. I certainly do. Now, let's go into the JAS layout, and let's just take a look from a top-down perspective. This is the kind of day where we're going to probably see a lot of things that look interesting, but we got to find things that meet our criteria. So let's go the top-down perspective. Let's rank by move, and we're going to see materials, industrials. I want to rank by two-day momentum. So one thing you're going to notice, why was utilities up there? Utilities were up there, going by two-day momentum, I'm sorry, because I'm not looking at the S&P 500 or 1500. I'm looking at, in this view, we'll see how many, 3,733 stocks today. All right. So this is going to be broader than the S&P 500. So just look at the utilities, industrials, and financial services. And let's add basic materials because it was up 2%. Let's even take out financial services. All right. So what I basically did is I think I took the top 3 percentage performers anyways. All right. Here are the industry groups. Let's take the top 10 in the top 3. 1, 2, 3, 4, 5, 6, 7, 8, 9, 10. And if I want to follow my own rules and be a good top-down investor, then I want to buy stocks that are within this group. So let's go down here and say 130 is too many to look at. Let's filter for $5 and 500,000 shares. And we have left with 76. Let's just rank them by positive impulses. Let's just go down the list. WSO. You're going to see a lot of these stocks. It's probably an industrial stock, I believe. Been in a long, but it's got higher highs and higher lows. Here's higher low. Will this take that out? Not the kind of thing in the place that I typically buy, but this could be a turnaround. We can pop down the fundamentals while we're looking at it. $2 going to come in against 237. Not a lot of growth, pays a 2.38% dividend. WCC, Westco International, like this a lot. Gap up, pullback, breakout, pullback. Looks like it's breaking out again. It's going to have 382 versus 316. So that's about 66 cents, which is 20% growth. It has a PE of 18% and pays a small dividend of 1.54%. What does it do? I highlight that. Business to business distribution, logistics, supply channel. This one looks like it looks good right there. All right. Next is RS. This is definitely an industrial. Reliant Steel. I'd like to see it clear the 200. Here's one that I own. It's always nice to have a stock go almost up 100 points in a given day. GE Vernova. Why was this one up? It's up because it is a data center, energy, and more play. Earnings don't come out to January. $3 going to be looking at versus $1.73. So that's over a double. Multiples 59, teeny weeny dividend, but a nice viable gap or big gap up here on massive volume. Would I chase it here? No, the high jumps at 95.64. Dan, I think this is automobile parts, if I remember correct. Dana, nice uptrend, pullback, and a breakout. Now, if you're wondering what that green triangle is, we recently launched John Person's package, which went to a number of paid beta users, and he's currently working on the branding and finalizing the package, and it'll launch sometime around the end of or beginning of the year. But I trade with his stuff all the time. I love his PPS buy signal, so why not put it on the charts? Because now it's available to you as well, or will be more broadly soon. 3.46% dividend. Power conveyance and energy management solutions for vehicles and machinery, automobile based. 35 cents coming in versus 25. So that's a 12. That's almost a 50% growth rate there. And if you look over here, 3.46% dividend, you got to like that. CE, Celanese, basic materials, too far down for me. ALV, Auto Live. Consumer cyclical, breaking here above the 50. I just wish it wasn't in a downtrend. Going to have 286 versus 305. UFPI, too far down. SLVM. Silvamo, I have no idea what they do, so I just hover over it. Printing paper, boring. SAIA, I think that's logistics. Let's see. Take a look at that. That one looks really good. What does it do? Trucking logistics? Transportation company, less than truckload services for shipments. All right, logistics. I like that. Doesn't pay a dividend. It's going to have $1.87 versus $2.84. I'm not thrilled on the earnings per share growth, but this thing obviously is sold off. It's below the 200 most of the time. Taking out the 200 weekly, this one looks interesting. Kind of bottom fishing for something. ORA, Ormat Technology, big uptrend, sideways move. Is it getting ready to break out? Looking for 66 cents versus 72. Not so great. Nucor Steel broke out on the rate expectation. So you can go down the list and look for stocks that make sense. I mean, I love GEV. That's why I'm in it. But would I tell you to go buy it? No. Wait for it to pull back. It always seems to. And then the other one that probably looked the best here was SAIA. Again, you're going to formulate your own opinions. None of this should be considered investment advice. I'm just looking at patterns and things that I like for me, and hopefully that's helpful to you. Now, every once in a while, I will change it up, and I'll just start by looking at all the industry groups and take the top 10, 1, 2, 3, 4, 5, 6, 7, 8, 9, 10. And iRobot, this one's been kind of volatile. WSO, GEV, DAN, UFPI. So a lot of them are the same. SHLS is a solar stock. Uptrend, pullback, break above the 50 would be interesting. Volume breakup, momentum. You're crossing over with relative strength at OBV, certainly not extended. Here's KB Home Builders. Well, it's above the 50. I wouldn't let it get much below the 50, but if you want to play home builders. So lots of things you can do with the tool. from a top-down perspective. Now let's do the more fun, which is bottoms up. So we hard-coded, and most of the people that have the product are aware, we hard-coded my two favorite scans. And what I mean by hard-coded, let me clear this. It means that you don't have to check a lot of boxes. You just have to go into the impulse, and we got to clear our filters. Bring us back to the 3733, and let's just look at the A pluses. These are my favorite double momentum signal. It's been one of my best signals of the year and of some time. This is DRTS, Alpha Tau Medical. No, nothing about it. It's a low-cost healthcare stock. After hours, big move. All right, so it has a treatment for brain tumors, which are one of the most bad tumors out there. A lot of drugs have failed here. It's up on the patient's been treated. Probably way too early for my interest. HST, Host Hotel and Resorts. I noticed a number of hotel stocks were looking interesting. 47 cents coming in versus 44. 6% dividend. That's why you buy something like this. A double momentum signal here. Relative strength and OBV look good, not extended. I like HST. Neogenomics, a low-cost lab. Now, this is probably a pretty safe buy here. I know the company. They're involved in cancer genetics and other testing. Never mind, that's not Neogenomics. This is Neogen. They're involved in food and animal safety worldwide. Okay, not my cup of tea, but nice move here, breaking out above the 200, double momentum, relative strength, and OBV look good. And by the way, when all these moving averages are the same, I don't pay any attention to the high jump because the high jump is so compressed because all these moving averages have pulled in together. Neogen looks interesting. RGA, Reinsurance Group of North America, 585 coming in against 499. You know, when I think about reinsurance, I think about somebody is backstopping all these insurance companies against hurricanes. There were no hurricanes to mention in Florida this year. Does that mean the reinsurance companies are going to do well? 1.63 dividend, 585 versus 499, so it's about 20% growth. Stock has a PE of 8.44. That's interesting. And then XHR, another hotel company, 23 cents versus 30. That's all the way to 10. Okay, we don't have future looking. All right. 15, 3% dividend. I probably like this one better. I just feel like this one's heading higher. So on this list, I liked HST a lot, and I like Neogen and RGA. Now, you can't buy 12 stocks tomorrow. I certainly won't be. But I might be looking at these stocks and looking at if I can find an appropriate option trade. And we'll talk about that type of a thing on Saturday. The other trade I like, this is my typical pullback in an uptrend trade. It's the A trade. So we'll tell you what we're looking for. We're looking for a squeeze. We're looking for at least one momentum or breakout. This is gap, volume, breakout momentum on this move. Relative strength coming up above its moving average, as is OBV, not extended. AHCO, what do? Adapt Health. Medical equipment, medical supplies. Okay, not the most sexy business. 0.34 versus 0.39. AIG, another insurance company. ANDE, Anderson's. That's in a nice uptrend. Must have been in a downtrend over here. It was below the 200. What do? Agricultural, trade, renewables, plant nutrients. Okay. Going to have 84 cents versus $1.36. I like earnings growth, so to me, it makes me less interested. ATI, Specialty Alloys. See what it says. Specialty materials and components, high performance materials and components, alloys and solutions. The stock company's been around a while, 88 cents versus 79, so a little bit over 10% growth, has a PE of about 30, no dividend. I like the uptrend. I like this move here, and I like this breakout. It's got a new CPR, volume breakout momentum, good relative strength in OBV. And I'm just going to pick it up now and just look at them one at a time and see if anything looks really good. This is the one, the Alpha Tau, too early for me. ENVB, big gap up. Ford Motor Company. And you look at the steady turtle here of Ford Motor Company. Got yourself a pullback and a breakout. You've got relative strength and OBV both breaking above. Volume breakout momentum from a squeeze. Pays almost an 8% dividend. It's going to give you 7 cents versus 39. So it just has to beat the estimate or beat the whisper number. And we get excited. I like Ford, FLYW, Flywire, payment enablement. I remember I thought they were a drone company and they're not. And again, nice steady uptrend, a buy signal off of the 50, a CPR volume breakout momentum out of a squeeze with good relative strength at OBV. And it's a little bit extended, but I can live with it. It's sitting right on the 50 and the 17. Gray technology, or gray media rather, breaking out over the 50. Here's that HST again. IMVT, Immunovant, beautiful run up. This is a emerging biotech stock. Somebody just bought a lot of shares. Pipeline. Do they make the Roivant science drug? I wonder. Chronic inflammation. Uptrend, pullback, breakout, nothing wrong with that. LAUR, I think this is school, Laureate Education. I've never made money on the education stocks. I always buy them at the wrong time. That's just me. MTG, Magic Investment Corp, 2% dividend, 72 cents versus 72. I like the pattern. I'm not sure I like the fundamentals. NMI Holdings. Private mortgage guarantee insurance servicer must think that mortgages are going to increase, both refinancing and new homes. $1.18 versus $1.07. The Real, I only know that because I've heard it on TV. Online marketplace for luxury goods. Uptrend, 3 cents. Now, this is interesting. It's turning positive from a financial perspective. Typically, that's not a bad time to get involved with something. Don't know enough about it. It's not my cup of tea, but I do like uptrend pullback. Looks like it's breaking out here. It's not extended. We got a CPR volume breakup momentum from a squeeze, relative strength at OBV conforming. RGA we looked at before. SPXC, nice uptrend, pull back to the 50 and breaking out, not extended. UPS, I saw somewhere that somebody bought 205,000 calls today, $205,000 worth of calls. UPS is looking at 218 versus about 275. Now, the stock's been in a downtrend. That may already be priced in. 5% dividend. What I love about breaking above a moving average, if it breaks below, I don't want to be in it, so I know where to put my stop. 5% dividend, nice breakout here. Breakout momentum from a squeeze, relative strength at OBV look good. And lastly, here's that hotel, Zenith Hotels and Resorts. So, folks, there are a lot of nice looking charts here, nice stories. Everybody loves a bull market. We're in one. I am still respectful that we often see the market go the opposite direction the next day after Powell speaks. So be careful. Profit taking is great. I took some of my options that are expiring a week from Friday. Why not cash them in now? Well, because I give up money, but at least I'm going to take the profits out of them and not risk losing it. Have a great day. I will be around tomorrow night, and please consider joining me on Friday. I don't want to just sit here and promote myself, but I can tell you, I love doing those weekend events. I do them for a long period of time, and usually the people are pretty happy. So I'll post it. I always forget to. It's not nothing broken. I have to shut it off within Market MRI Pro here, or else it will stick around over everything else that I open up. So Saturday, December 13th, 11 a.m. Look for the link below. Talk to you tomorrow, and I love bulls.